Alright, we'll start today's market update with a quick review of yesterday's biggest movers, then look ahead to today's most important news. Wall Street turned lower today as investors weighed Federal Reserve policy uncertainty and fresh concerns about global growth. The Dow Jones fell over 200 points, reversing gains from earlier in the week. The S&P 500 also slipped modestly, giving back some of its recent rally. And the Nasdaq traded flat as strength in select tech names offset weakness in consumer and energy stocks. Nvidia shares pulled back slightly today after its earnings rally met with some cautious analyst commentary. KeyBank reiterated its sector weight rating and lowered its price target for Nvidia, citing valuation concerns following the recent run-up. In fact, Nvidia has more than doubled in value since the beginning of the year, driven by the massive adoption of artificial intelligence. But with such staggering gains, it's not surprising that some analysts are starting to sound the alarm on stretched valuations. Despite the pullback, Nvidia remains one of the most valuable companies in the world, with a market capitalization exceeding $3 trillion. Tesla declined today following reports of softer EV demand in Europe, with some analysts suggesting that consumers are waiting for Tesla's upcoming vehicle launches later this year. Deutsche Bank cut its price target for Tesla stock, which has now fallen around 20% year-to-date. On the other hand, Amazon and Alphabet edged higher today as digital advertising and cloud revenues continue to hold strong. Both companies are benefiting from the shift towards online services and e-commerce. In fact, Amazon is now expected to post some of its strongest earnings growth in years, thanks to robust consumer spending and a resilient economy. In the energy sector, ExxonMobil and Chevron retreated today, pressured by renewed volatility in crude prices. Both oil giants have been grappling with challenges such as production cuts by major producers and a stronger dollar that makes oil more expensive for global buyers. Brent crude, the global benchmark, has lost around 12% this year, leading to concerns about profitability for oil companies. Looking ahead to tomorrow, all eyes will be on the latest employment report for further clues on the Federal Reserve's policy path. With inflation running hotter than expected, there are growing expectations that the Fed may hold rates steady next month, keeping the door open for further tightening if needed. In other words, investors are eager to see if wage pressures are cooling as price increases begin to moderate. Speaking of the Fed, several central bank officials are scheduled to speak this week, including Bullard, George, and Kashkari. Their comments will be closely monitored for any indication of how the Fed might react to the latest economic developments. Additionally, earnings season is in full swing with companies like FedEx, Lululemon, and Micron scheduled to report their quarterly results this week. These reports will provide insights into the health of various sectors and could influence market sentiment. And finally, tomorrow, China is expected to release its official manufacturing and service sector PMIs. These indicators will provide insights into the state of the Chinese economy and its potential impact on global growth. As China is the world's second largest economy, any signs of a slowdown or rebound can have significant implications for global markets. So to wrap up, let's quickly recap today's key points. US markets slipped today as traders digested Fed uncertainty, energy weakness, and global growth concerns. Sentiment remains cautious heading into September as investors grapple with conflicting signals from the Federal Reserve and mixed economic data. While tech stocks helped prop up the Nasdaq, keeping it steady today, the broader market remains vulnerable to downside risks. Do you think the Fed will deliver a cut next month or hold firm to fight inflation? Let me know your thoughts in the comments below. And if you haven't done so already, please make sure to subscribe to Profit Path. Hit the like button if you enjoyed today's video and feel free to share for more timely finance coverage. Thanks for watching, and I'll see you back here tomorrow.